This is the Investors Channel where investors come for stock recommendations and financial news. And today, we're going to go over all of the stocks I've recommended for the new year. So, Happy New Year's, guys. Also, this year I'm going to be talking about this book, Rich Dad, Poor Dad. The new updated version of this book has study sections which have questions and quotations, and I'll go over all of them. And if you want a copy, I'm going to link this book down in the description. We're going to talk about Snapchat, MGM, AT&T, Ford, and Lucid Motors. Now Snapchat, the last time we've talked about it, they've had 191 million daily active users, but that has dropped by 5 million since, as you can see here. Snapchat has lost a lot of users because of the new updated version of the app, yes, and because people who are highly paid, like highly skilled people, they left the company. Also, Snapchat's earnings is dropping. They're actually losing money. However, Facebook was in a similar situation just 6 or 7 years ago. Also, Snapchat is still in its early stages with a lot of initial failure. However, with their new partnership they're forming with Amazon, where you can buy something you like if your camera picks up on it, is going to help them make some money because they earn a commission from the item that you buy. Also, they are getting more ads, so that's business for them. And they will figure out many other ways to monetize. But what's going to draw people to this app is the new filters and games that are exclusive to Snapchat. With Instagram, you can also share stories, but they don't have the exclusive filters and games. So anyways, guys, Snapchat is a speculative move, and if you already have shares, now is a good time to layer in. If not, now is also a good time to buy. But I would only recommend the stock under $8 a share. And also, don't put too much money in because it's a speculative stock. Alright guys, now let's talk about MGM, the casino company I recommended. Now, when I recommended this company, this was after there have been a lot of lawsuits about the shooting that happened at Mandalay Bay. I'm not sure how to pronounce it, but you get what I'm saying. And we bought the share around $25 to $26. Now the share has gone up to somewhere around $28 because this investing company called Starboard brought into MGM. After the company raised its position in MGM, the value has risen by 2.3%. And as I mentioned in the MGM video, they are trying to cut costs. For example, they project a cost-cutting drive this month to boost its profits by $300 million over the next 2 years. This may be done by letting some people go, unfortunately, because MGM is not in the best economic state you can imagine, but this will add value to our shares, in addition to Starboard advising this company on better decisions they can make. Also, yes, this company does have to be wary for the trade war and tariffs, but other than that, I expect to see a huge gain coming within the next couple of years. Until then, just keep on collecting those dividends and reinvesting them. Alright guys, now the next stock we're going to talk about is AT&T. Yep, now when I recommended it, it was maybe around $30-$35. It's around that price right now, but there was a fake marketing tactic that AT&T had used. On top of the smartphones, they put 5GE, which means 5G evolution. Yeah, evolving, not meaning that they got there yet, but it made people think that their phones were now faster, which is not the case. Same speed, maybe a little bit faster than 4G, but still. According to an article I found on Seeking Alpha, network tests don't show AT&T having a faster network in initial 5G markets. Yep, fake outage here. Not to mention, T-Mobile actually made a joke about it. Sure, you could put any labeling on your phone, but just make sure it's true. If the speeds are actually faster, then there would have been no problem, but this pushes the share price down. Fortunately for our stock, they have assets and they're trying to acquire another one, Time Warner Cable. Now, they've had a few failed attempts from the Justice Department. However, one of the lawyers is fighting to make the deal go through. Here's evidence that the former lawyer for AT&T is fighting back against the $85 billion deal to block AT&T and Time Warner merger. And he says he was going to rescue himself from the Time Warner appeal because he was involved in it at the Time Warner side. Now, if you already have a position in AT&T, I would recommend buying more under $30 a share. If not, I would recommend buying at these levels, but do not buy any higher than 35, as it will not be a bargain. Because of all of their assets that they have, and because this will most likely go through the AT&T and Time Warner merger, I think the share is going to go above $40 a share. Until then, keep on reinvesting your dividends. Alright guys, now we're going to talk about Ford. So yes, there is a trade war and things aren't looking so great for Ford. They may be selling less cars, but they still have a great balance sheet, as I'll show you right here. Now Ford is focusing more on their pickup trucks, and I found an article on the Investor Place talking about it, so here we go. Ford is close to dominant in pickup trucks, particularly the F-150s. SUVs are showing some strength, but the high-end Lincoln Navigators are more notable this year. So yes, people are buying Lincoln Navigators. Now this may not continue because a recession could hit, and they may lose sales in the Lincoln Navigators as well, but their pickup trucks are doing really good. Unfortunately, they're not selling as much in China because of the trade war, but I believe that can soon turn around, either when the United States and China reaches an agreement or when Trump is out of office. Now, with all the doom and gloom, I would recommend this share under $12 a share. And if you already have a stake in this company, I would layer in at under $10 a share. And guys, remember, this is all short term, but for the long run, I would keep reinvesting the dividends and expect the stock to go to $20 a share in like about 5 years. And last but not least, Lucid Motors. Now this company is a competitor of Tesla. The founder used to work at Tesla, and I guess he ventured off. Now, Lucid is considered to be faster than Aston Martins and Beamers. And his fastest lap was just under 2 minutes. And remember when Elon Musk said that he's considering taking Tesla private and funding is secured by Saudi Arabia? Well, not the case. They're actually investing $1 billion in Lucid, which is bad for Tesla. Share price slid by 2%, or as much as I should say. However, this is good for Lucid Motors because they have more capital for innovation. Anyways, guys, this is a speculative company, so I'd only recommend the stock under $2 per share. Thank you for watching. And please don't forget to smash that like button, subscribe with bell notifications so you never miss out on another video, comment letting me know if you have any questions, and share.